Hi there, welcome to your first lesson. In this lesson, you are going to learn all about candlesticks, okay? I'm going to teach you exactly how to read candlesticks. This is like the ABCs of trading before you can even learn how to trade, okay? You have to learn how to read candlesticks. And in this lesson, I'm going to do my best to try to teach you everything that you need to know to be able to read a candlestick. So right now you can see here I have a chart open on the screen, and this is the chart for Bitcoin. Now on this chart here, I'm sure you can see all this blue and red things, right? And this is what candlesticks are. These things are called candlesticks. And in this lesson, you are going to learn how to read them. You'll first of all learn what they are, and you will learn exactly how to read them. Okay, so let's get started right away here. Now, by the end of this lesson, you will learn what candlesticks are, you'll learn how to read them, and you'll learn all about the different types of candlesticks that exist in the market, okay? Now, what are candlesticks, okay? Candlesticks are basically what is used to describe price action in a market, okay? This is the things that we as traders look at to be able to know what is happening in the market, okay? We'll be able to know what direction the market is going in the future or what direction it has gone in the past. So this is what candlesticks helps you to identify. Now there's two different types of candlesticks that get formed on the chart, okay? The first one is the blue one, okay, which is also known as a bullish candlestick. And then the other one is the red one, and this is known as the bearish candlestick. Now, what is a bullish candlestick? Basically, a bullish candlestick is a candlestick that tells us that the price has gone up, okay? It means that the price has gone up, hence why the candle is blue. And then a red candlestick basically tells us that the price has gone down. All right, so this is what it is. Blue candlesticks tells us that the price has gone up, and then red candlestick tells us that the price has gone down. All right, now how does a blue candlestick get formed? Let's talk about it. Now, in order for a candlestick to be bullish, the closing price of the candlestick has to be higher than the opening price. Now, every single candlestick that gets formed on a chart, they're all based on a specific time frame. So depending on what time frame you're looking at the chart from, is going to detect the price action of that candlestick. I'm going to show you an example of what I mean, okay? Let me go back to the chart here. All right, so if I go back to this chart here on trading view, okay, you'll see here at the top, it says 1H, okay? That is the time frame of this chart that I'm looking at, okay? So this is the 1 hour time frame. And this basically means that every one of these candlesticks that I'm looking at right now represent 1 hour. So this candlestick is 1 hour of trading. This one is 1 hour. And when you touch each candlestick, you'll see at the bottom, it tells you the time, right? So this candlestick began forming at 1 o'clock, okay? And then it will close at 2 o'clock, right? Because it's a 1 hour time frame. And then this previous candle here, it started at 12 o'clock and then it closed at 1 o'clock. Okay, so this is what I mean. When you look at each candlestick, it gives you information based on the time frame that you're looking at. Okay, Now let's go back to the slide. Okay, so now that you understand the time frame and everything, now let's talk about the opening and closing price. So remember, I said that in order for a candlestick to be bullish, or aka blue, the closing price has to be higher than the opening price. So on each candlesticks, okay, that gets formed on the chart, each of them has an opening price and a closing price, okay? The opening price is the price that the candle opened with at that hour. So remember how I said there's different time frames, right? So let's use the 1 hour time frame as an example. So let's say at 12 o'clock, okay, we're looking at the 1 hour time frame, and let's say this candle here, that this one here, okay, it started at 12. When this candle opened at 12 o'clock, it opened, let's say for example, it opened at 1,000, okay? From 12 o'clock, when this candle began, the price was at 1,000, okay? And then within that hour, okay, between 12 o'clock to 1 o'clock, 1 o'clock is the time that the candle is going to close, okay? The candle moved, okay, from the opening price, which was 1,000, and then when it was near its closing time, it closed at 1,200 or 1,300. Now you see what happened there. The price that the candle closed at is what? It was higher than the price that it opened, right? What price did the candle open at? It opened at 1,000, right? And then once 1 o'clock hit, the candle closed at 1,300. Because the price that the candle closed at was higher than the price that the candle opened at, this is going to make it so that this candle will end up being a blue candle, okay? I hope you understand that. So that's what dictates the candle from being a bullish candle or bearish. Now let's talk about the bearish candle. What makes a candle to end up being bearish, aka red? It's basically the opposite of what makes a candle to be bullish. So in order for a candle to be bearish, the closing price has to be lower than the opening price, okay? So let's use 1 o'clock again as an example. So let's say we're looking at the 1 hour time frame, and then at 12 o'clock, this candle started. When the candle opened at 12 o'clock, the price was at 1,500, okay? This is just an example. So it opened at 1,500, and then towards the closing time, okay? So once 1 o'clock hit, then that candle closed at 1,100, okay? So it opened at 1,500, that's very high, but then when it closed, the candle closed at 1,100. So because the closing price was lower than the opening price, this is going to make it so that the candle ends up being a red candle, or aka a bearish candle. So that's what basically dictates the color of these candlesticks, okay? Remember, when you look at the candlesticks, we have the opening price, okay? And then we have the closing price. The other thing that we also have is the wicks. We have the high wicks and then the low wicks. The high wicks is telling us the highest price the asset went to during that time frame, and then the low is telling us the lowest price the asset went to during that time frame. So whenever a candlestick gets formed, right, when the candlestick opens at the time frame that you're looking at, okay, the price is not going to just open and then just start moving all the way up, right? There's a lot of things that happen, and I'm going to show you an example of what I mean. So let's say this is a candlestick. Okay, I'm going to just attempt to draw it. I hope you can see it right here at the bottom. Okay, this is a candlestick. Okay, so we have the wick here at the top, and then we have the wick here at the bottom. Now, this is the candlestick. Now, let's talk about what is happening in this candlestick. I'm going to try to draw it here on on the right here. So let's say this candlestick opened at 12, right? Now, when this candlestick opened, okay, we're going to use the bullish candle as an example. So let's say this is a bullish candle. I'm going to try to draw a scenario of what happened. So let's say the price opened right here, okay? Whatever that number that is, I opened here. Now, when the price opened here, it didn't just start moving up right away. Now, what the price did was when it opened, instead of it going up, it started dropping. It dropped lower than the price that it opened. So remember, the price opened right here, okay? But it managed to drop all the way down over here. But after it got to this price here, okay, this bottom, it started pumping back up, okay? It started going back up. And now as it is going back up, it went past its opening price. So it opened right here. But now after the drop down, it started going back up, okay? And it passed the opening price. As it is going up, it shoots all the way up to, I don't know, let's just say right here. Okay, it shoots up to there. But then after the candle was about to close, the price didn't close here. It actually started coming back down. Okay, it started coming back down. And then finally, when it was about time for the candle to close, it closed right over here. Okay, and then what this does is it leaves this wick at the top and it leaves this wick at the bottom. So when you look at this, when you see this wicks at the top, you'll be able to see, oh, okay, so the highest price that this candle went to during this time frame was this, okay? And then the lowest price that this candle went to during this time frame was this. So these two things at the top and at the bottom, those are called wicks, all right? Now we understand the opening price, we understand what the closing price is, and we understand what the wicks are, okay? Now the last thing that you want to learn about candlesticks is about the body. So this part here in the middle, that's called the body, okay? And how the body gets formed, you might already know. Take a guess. The body gets formed by the opening price and the closing price, okay? That's how the body gets created. So the difference between the opening price and the closing price is going to create the body of the candlestick, okay? So just keep note of that. The middle part here is called the body. The top little sticks here, you know, it kind of looks like sticks. Those are called wicks, all right? And then we have the high wicks, and then we have the low wicks, okay? This is the anatomy of candlesticks, guys. And now I want to just show you another thing here. Let's go back to the chart. Back at the chart here. Now I want to show you something here. Whenever you touch each candlesticks, right? You touch each candlestick, you'll notice that at the top here, you're provided with information about the candlestick. Every single candlesticks, you'll get information at the top here about the candlestick. And this information is what we just learned about. You see here, O, H, L, C. The O stands for the opening price. The H stands for the highest price. Okay, that's the highest price that the candle went to during that time frame. And then with the low stands for the lowest price it went to during that time frame. And then the C stands for the closing price. Okay, so this is like really valuable information to have right here on the chart here. So whenever you touch each candlesticks, this information here at the top, it will change based on the candlestick that you're looking at. And there you have it, guys. By now, I believe you should know exactly how to read a candlestick. It's very, very simple. And in the next lesson, I'm going to show you more about the other different types of candlesticks that exist in the market. But for now, this is the basic of candlesticks. Now let's move on to the next lesson.